Hello everybody, and hope everyone is well. It's been a little bit since I've done a video. There's been some quite big drastic changes to the portfolio. Well, not drastic, but there's been some changes to the portfolio. I think first I'll go over the buys of what I've done, and then I can go into a little bit more detail onto why I've done it. I think as you guys can see from the title of the video, we have hit a milestone of 30,000 on the portfolio. We also do have about 16,000 in a savings account, so really close to that 50,000 mark. I think overall just shy of 1,000 off, so which would be a massive milestone to reach. And then we're halfway to 100k, lads. So getting there. So in terms of my buys, I think this day, 24th, 5 days ago, I think I was just looking to add more to S&P. The tech stock, I'm not going to be adding too much more to this stock. I understand it's heavily skewed into tech, like massively, and even so more towards three companies, which I believe is Microsoft, Nvidia and Apple, I believe, are the top three, and they hold about 60%, which is, very drastic. So not adding any more, since I have about a good 17% of my portfolio in that, so I'm holding off for that for now. I think once weighting changes on the portfolio or on the ETF, or I get a higher percentage higher amount in my portfolio, then I can allocate a bit more. But for now, I'm just going to hold off on that. So these are where it changes a little bit. So S&P, this was from my paycheck. I had a decent month, so I invested quite a little bit. S&P 500, 800, pretty standard. That's generally what I want to try and do. I was trying to diversify my portfolio, which I'll go in with a little bit further, like I said. So I bought MEUD, which is a Stocks Europe 600 stock. Pretty much just covers the 600 largest companies in Europe. I think the main idea was just to get more coverage. My portfolio is 99% US stocks. And whilst I don't want this to be like a big stake in my portfolio, I want it to be 5-10%, maybe even 15% going down the line. So I think that's the goal with that. And this one was just buying out of this one, as there was no real need to have this. As I have Visa, and I thought it might be worth buying Mood for a little bit, just to see. Visa, I decided to buy just because I saw it did quite a bit. I wanted to dollar cost average down a little bit, and I was like, why not? It's a bit of a tough one. I do have hope in Visa. I think they're going to grow, but I guess it's time will see how well it does over the years in terms of growth. Obviously, S&P 500 is largely outgrowing Visa by quite a bit, I think, over the past 5 years. That's obviously due to a lot of the tech boom and whatnot, and the AI boom, but it is quite a decent percentage of our portfolio. I would like to see a bit more growth from this stock over the next coming few years, and I think it will. It just will have to see how much that does look like. I think over here you can see my dividends, 300 total. Obviously, most of these companies are going to be taken out of. They're more so what I had before I've done a complete restructure. Cool. So let's go to here. I think as I said earlier, and I discussed what the plan is with this. As we can see, this is all over it where we're here. The goal is to get that to 10%, 35%, 55%. There's always room to change those allocations and move them about. It really just depends on what's the best at the moment. I think for me, the main idea was just to get more exposure to Europe, as I mentioned. I think that's a US stock. I can go through these. I'm pretty sure 99% of these are US. So US. Oh, that's not US. That's Hong Kong. US. You get the point. So everything's hedged in the US market, and if something was to happen to the US market, it would be nice to have something to maybe hedge against that, and maybe have a bit more diversity in my portfolio. So that was really the main reason behind that. And as you guys can see, portfolio has been performing pretty well over the past few months. We've gone up. It's constantly seeing up. And this is obviously not always going to happen. These are good times right now. So, you've always got to prepare yourself for when the bad times come. And when the bad times come, you keep buying. I think as the saying is, right, time in the market versus time in the market. So I think it's always food for thought just to keep going in the market. Your stocks go up, add more. Your stocks go down, add more. Just keep adding more. But yeah, guys, wasn't really too much. Well, there was a little bit to go over, but not too much in terms of changes. Added a little bit more European stocks to the portfolio. We hit the 30k mark, which is really good to see. I think by the end of the year, we'd be looking at about a 45k to 50k portfolio. That does include some extraction from my savings account as rates do drop. I'm still going to keep a buffer of around 8,000 in that cash position in a high yield savings account, but there's no need for me to have quite a large amount. I think it's 16,100 and something. No need for me to have that amount. I can easily drop that to around 8,000, 7,000, and I'll be completely happy with that. And I can siphon that into this one. That would immediately raise it to 37, and then plus my monthly contributions. Easily going to be hitting the 45, 50k mark by the end of the year, and then we will just keep going up and up from there, lads. So, seen some pretty decent gains. I think realistically, looking at let's go through the stocks quickly, and we've seen obviously a massive rise in Tesla. I think there was some news announced recently with the stock. That's why there was. Don't remember exactly, but there was definitely some news. We saw a bit of rebound on some of these. So United Health dropped, went up quite a bit. AbbVie is doing alright. I'm happy with Walmart. Realty is still struggling just because the interest rates are still ridiculous, still high. Once they start dropping, they're in a very good position financially. So I do think the stock will be rising to. We might be seeing it hit around that 70 mark again once those interest rates do start dropping and people start putting more of their money to go towards dividend yield rather than high yield savings account. I know I mentioned previously about a week ago about a video on whether to invest in Fiverr or not. And as we can see, I mean, it's only very drastically, but it's gone up a little bit. It's gone up a good 6-7% since that time. It is going to go up and down, but it is one of them stocks that I'm keeping my eye on if I do want to add more positions. It's just whether I want to do that. Like I said, I don't really want to add too much to my individual stocks. Then I'd go ahead and add Visa. It's a little bit of a roller coaster, right? But going down the line, it's just a tough one. But I'll get back to that, I think, eventually. But for now, I want to be really focusing on sticking with this. What is this between the current? That's completely fine. That's just saying that it's unbalanced compared to what it is. Yeah, that's completely fine. Anyway, guys, I hope you enjoyed the video, and hope all is well. I know we've got the if you're a football fan, the Euros are on today and tomorrow. England are playing tomorrow, so we'll see how the boys do. They haven't been playing too well, so hopefully we can put it out of the bag somehow. Hope everyone enjoyed the sunshine over the weekend. Have a good weekend, and we'll get another video uploaded in the next coming days. Have fun in a bit.